Welcome back, everyone, to the Audacious Money Witch channel, where we talk about investing and trading and a lot of fun things.
Kevin, like, why do these guys keep wanting to short Tesla? Like, what is the fascination with let's short Tesla, man? What is it about it?
Jeremy Lefebvre is shorting Tesla. Why Tesla stock is doomed in 2024. It's out of control. First of all, let me just say I am not a Tesla hater. I, in fact, own Tesla shares in my Art of Investing account. For the people that are in denial and told me that Jeremy Financial Education is not shorting Tesla, well, here it is. His put option right here. He is showing it off right in your face.
And then I had my put option contracts here. These expire September 20th, 2024, 255 puts. These are basically a hedge, against Tesla and against the market if it was to go down or something like that, right? And they already have been doing pretty good. I've always kind of thought about cashing these kind of if the stock's between, $200 and $150, right? Somewhere in there is kind of like a cash time for me, right? Because these will decay over time, right? They expire September 2024, so as you get closer and closer to September 2024, they're gonna decay in value. That's the way option contracts work, right? So if I could get something here in the short term at a very attractive price, I would probably go ahead and take that, even if felt like the stock might go lower short term.
Did you see that?
Really confident that short the stock. Who's gonna short the stock?
Jeremy Lefebvre is shorting Tesla.
Now I am hoping it does go under 175 because then I can get out of my other put option contract there.
I told you. Tesla is doomed in 2024 until this is resolved.
That's what's kind of frustrating because, if you're going to, let's say short Tesla and you want to, be negative on Tesla, like give me your reasons why you're doing that.
The reason why Tesla is doomed is 99% because of this. Headline inflation in the US came back in at 0.3% for the month beginning the annual inflation for 2023 to 3.4%, higher than expected. Core inflation, which excludes the volatile categories such as food and energy, also came in at 0.3% for an annual figure for 2023 of 3.9%. So core inflation did come down, continuing on its slow disinflationary path. But headline inflation actually rose on an annual basis. Going forward, it's going to get trickier. The so-called last mile is going to get a lot trickier. We're not going to have the tailwinds that we had, and we're going to have some headwinds for over 12 months. In part, thanks to the Federal Reserve's aggressive interest rate hikes, we saw inflation fall quickly from its highs to around 3% in June of last year. But since then, while core inflation has trended down, headline inflation has remained in that range, actually trending up. The universally agreed healthy range for inflation is 1 to 2%, and slowing that last 1 to 2% of inflation is going to be the most difficult challenge, especially given the headwinds facing the economy in the beginning of this year. So we're seeing further disruption on the supply side. What's happening in the Red Sea is significant in the case of Tesla. Even though Elon didn't use that as an excuse, starting in December of 2023, a major supply chain disruption has been taking place.
Navy SEAL now presumed dead by the military.
Nathan Gage Ingram was one of 2 Navy SEALs who died on a mission to stop Iranian missile parts from getting to Houthi rebels in Yemen. Fox 4's Sean Rabb in studio with more on the SEALs' mission on the Red Sea and the man from Roanoke. Sean.
It was an 11-day search by 3 countries covering 21,000 square miles for 2 missing Navy SEALs. The U.S. Military Central Command released photos to keep Iranian-made missiles and drones from Houthi rebels. The Houthis, based in Yemen, have been launching attacks against commercial and Navy ships over the war in the Gaza Strip.
we already have in place to try to stop the flow of munitions from Iran to Houthi-controlled Yemen. And as a matter of fact, that's how we tragically lost those 2 Navy SEALs.
And despite it causing hundreds of billions of dollars in trade diversions, I have a feeling you're about to hear a lot more about this issue in 2024.
President Biden was also insistent today that the U.S. military will continue attacks against Houthi terrorists in Yemen, despite admitting that what they've done so far has not worked to stop the terrorists from attacking commercial shipping vessels in the Red Sea.
As it begins to affect everyday people and companies like Tesla. A rebel organization in Yemen has been attacking shipping companies that is moving through the Red Sea. And to understand why this could cause a resurgence of inflation that will keep interest rates higher for longer, the opposite of what Elon wants for Tesla. I need to provide a little bit of context around the global shipping industry in 2023. We live in a deeply interconnected global economy with countries exchanging goods and services valued at over $25 trillion annually. And according to the OECD, about 80% of international trade is done via the ocean with ships. According to the UN, that number is actually as high as 90%. So most trade is done by shipping routes connecting country to country. And one of the biggest and most important routes is through the Red Sea, a narrow stretch of sea wedged between the Middle East and Africa. If you zoom out on a map, you can very quickly understand why this passage is so important for global trade. It makes the trip between Asia and Europe, in particular, much faster than alternative routes, such as this route around Africa. Every year, about 12 to 15% of all global trade is routed through the Red Sea, which is about 3 to 4 trillion annually. The Red Sea is narrow, but there's also 2 even narrower choke points at the top. There's Suez Canal, which has had its own problems in the past. But at the bottom, there's the Bubble Deb Strait. It's a very narrow 30-kilometer wide bottleneck sitting between Djibouti, which is an East African country, and Yemen. This particular choke point's importance to global economy and the economies of the countries around it makes it very vulnerable to attack, which is what started happening last month. According to the Houthi rebels, they are a terrorist organization currently controlling about a third of Yemen's territory. And they've been attacking commercial ships moving through the Red Sea with missiles and drones. Over 100 missiles and drones have been fired at ships since the attacks began, directly targeting between 10 and 20 commercial ships, and they've mostly been ships that are Israeli owned or ships that are planning or porting in Israel. The Houthi attacks are happening as a part of the conflict happening between Israel and Palestine, with the rebels stating that they support Palestine and claim to be only targeting Israeli ships, but other ships moving through the raid have also been targeted. The attacks have made it significantly more dangerous for ships to route through the Red Sea, and so the first economic shock that came was from increased insurance premiums. And Bloomberg reported this week that premiums have risen to 0.75 to 1%, which might not seem like a lot, but it is once you realize how massive the value of these ships really are. A ship moving through the Red Sea might hold 10 40-feet containers with each goods valued at around $50,000 each, which is $500 million of goods per ship. A lot of companies are choosing to divert their ships through other routes. They're now sending ships around the south of Africa, a route called the Cape of Good Hope. This is significantly longer route depending on which countries are trading. It adds about 2,000 to 4,000 nautical miles to the journey. Trade between Europe and Asia is even worse because a lot of European ports actually depend on the Suez Canal. Longer distances and more time at sea means more fuel consumption, more labor hours, and therefore higher freight costs. And the supply shock is already rippling out across the globe. Air freight saw a 133% increase in the price per kilogram as demand has increased. If it persists, it will have a stagflationary impact. It's hard to know how significant the economic impact will be because it largely depends on how long the attacks persist for. But what is obvious is the type of economic event it's creating. A supply shock, a sudden decrease in the supply causing sudden increase in price. This has happened many times in the past, particularly around large global commodities like oil. Some events happened that hits the supply of oil. The price of the oil spikes and it ripples across the economy. Shipments cost more, flights cost more, trucking goods across the country cost more, and so businesses raise their prices to offset the higher costs of supply shocks. Supply shocks can also have a sort of stagflationary effect as well, where it's not just a rise in inflation, but an economic slowdown at the same time. The Red Sea crisis is literally slowing down one of the most important shipping routes in the global economy. So you can see prices for goods rise at the same time. As a general slowdown in the economy, what do you think, Ted? Oh, you think everything's going to rise and everything's going to go chaos? Oh, and you don't want to pay more for veggies and fruit. Oh no, Ted says it's not good. Not at all. Second, the headline, the base effects are not going to be working for the Fed anymore. When we talk about inflation, it's always a comparison between price levels last year to price levels this year. So there's kind of two different factors that go into the ultimate inflation figure. What happened to the prices last year and what's happening to the prices this year. For example, we were comparing 2023 prices to the very high prices of 2022. So mathematically, the inflation figure was small. And in annual inflation, they're called base effects. So when people say the base effects won't be working anymore, they mean we don't have the high base prices of 2022 to compare to anymore due to supply shocks could see inflation remain stickier. And then third, there's a limit to how much goods disinflation we were going to get. We need to see services disinflation come down. So far we've benefited because certain goods have been in outright deflation, and that has dragged the averages down. The service side tends to be a little bit more sticky. Services, on the other hand, still rose 5.3% in 2023, and that's mostly because services generally have higher labor expenses, and prices are influenced more heavily by wage growth. So getting that last mile of inflation down is likely going to depend largely on continued declines in prices of goods, which again, if the current supply shock persists, may be more difficult than last year. Elon on the Tesla call said, if the interest rate continues to be this high, Tesla's margin is not going to be bottomed. Therefore, the Tesla stock price is not going to be bottomed because people just can't afford a Tesla right now monthly. The next generation of EV is at least 2 years away. The reason why macro is so hard to predict is that you don't know who is going to attack which ship tomorrow in the ocean. Somebody else has control over that. If nothing else changes, I am expecting a second wave of inflation coming, depending on who gets in the White House, of course. That's why Tesla in 2024 is doomed.